Hi children, good morning. Today we will learn how to prepare the income and expenditure account when adjustments are given. Okay. So let's see the question. First discuss the question, then we'll prepare the income expenditure account. Income expenditure account is prepared by seeing the receipt and payment account. Okay. So first let's see the receipt side here and what all will be transferred to income expenditure account and what will not be. Okay, so you know that only the revenue, expenses and income are transferred to the income and expenditure account. So from receipt and payment account, first we have to identify that what will be recorded in income expenditure account and what will not be. So first here it is given balance carried down bank. This is the asset, this will not be recorded in income expenditure account. Now subscription, 3 subscriptions are given, 2001, 2002 and 2003. 2002 is our current year, so this subscription will be transferred to income and expenditure account. This is of previous year and this is of next year. In income expenditure account, we only record the income and expenditure of the current year. Okay. Now let's see the next what is given here. Next is donation. Since donation it is not specified here, we will consider it as general donation. It will be recorded in income and expenditure account, then income side, then hall rent, this will also be transferred to the income side, credit side. Interest on bank deposit, this is also revenue income, this will also be transferred. Entrance fee here, entrance fee maybe it can maybe the revenue or capital, we have to see the adjustment and we have to do it. Okay. Next let's see the expenditure side here, what all will be transferred and what. So first it is given purchase of asset, furniture. Furniture is the asset, so this will not be transferred to the income and expenditure account, but date is given. So if there is depreciation, depreciation will be recorded in income expenditure side. Asset is not recorded, but depreciation on asset is recorded in income and expenditure account, expenditure side. Okay. Now salary is given, salary is expenditure, it will be recorded in debit side. Telephone expenses is also expenditure, it will be recorded in debit side. Electricity charges, that also will be recorded in the debit side. Postage and stationery, that is also expenditure, it will also be recorded in the income expenditure account, debit side. Next is stationery over, then purchase of book. Purchase of book, book is an asset, so it will not be recorded in income and expenditure account. Next comes entertainment expenses, it is expenses, so it will be recorded in expenditure side. Now next comes purchase of 5% government paper, 1st July 2001. Here it is government paper, mean government bond, security. It is an investment, so it will not be recorded in income and expenditure account. But since percentage is given and date is given, we have to calculate the interest on government security considering the percentage and date. So whenever the date and percentage is given, you have to calculate interest on particular bonds and security considering the percentage and date. So an interest on bond is an income, interest on investment is an income, so it will be recorded in the income side, credit side. Okay. Then next miscellaneous expenses, that will be recorded, since it is an expenses, it will be recorded in the debit side. Next comes the bank balance, that will not be recorded since it is the asset. Okay. Now let's see a adjustment here. Our adjustment, it is given salary outstanding. What is our adjustment? We will add outstanding of current year. Here it is given the following additional information is available. Date is not given, that means we will consider it as the end of the year. Okay. So salary outstanding at the end of the year will be added to salary. Entertainment expenses outstanding, it will be added to entertainment expenses. Bank interest receivable, it will be added to the bank interest. Subscription accrued, accrued is also added to the respective income, that is subscription. Then 50% of the entrance fee is capitalized, that means only we will record 50% of the entrance fee in income and expenditure account Rest 50% will be recorded in the closing balance sheet. Okay. So, what is our entrance fee? Our entrance fee is 1000. So, we will record 500 in income expenditure and 500 in a balance sheet. Then furniture is to be depreciated at the rate 10% per annum. Here per annum is given, that means we have to consider the date here. So, we will only calculate the depreciation for 9 months. Since date is given, we only have to calculate for the period of use here. So, okay, depreciation will be calculated for the period of use here. Considering this all adjustment, we have to prepare the income and expenditure account. Let us see the income and expenditure account here. First, salary is given 2000. We added the outstanding salary 3500. Telephone expenses, no adjustment was given, as it is we transferred here. Electricity expenses charges, no adjustment was given, we as it is transferred. Postage and stationery also no adjustment is given, so we will transfer as it is. Okay. All revenue expenditure, if adjustment is not given, we will transfer as it is to the debit side. Then comes entertainment expenses, 900 plus outstanding 500, we added it and our answer is 1400. Miscellaneous expenses, no adjustment is given, we add written directly. Depreciation on furniture, we have to calculate the depreciation. The cost of asset is 5000. 10% is the rate of depreciation and we have to calculate it for 9 months from July to March. Okay. So, that is 9 upon 12, 5000 into 10 upon 100 into 9 upon 12, 375. Okay. Now, let us see the income side here. Then subscription, it was 10,000 and 400 is our accrued, that we had added 10,400. Donation, since not specified, we will consider it as general and write in the income side. Entrance fee 50% of 1000, that is 500. Bank interest 400 plus 150 receivable is given, that we had added and our here amount it is. Okay. Then next is our interest on investment. Okay. Interest on investment, how we will calculate? 8000 is our investment into 5 upon 100 into 9 upon 12. Okay. So, this we had 300 is our answer, interest on investment. So, whenever the date and percentage is given in the receipt side, we have to consider the date and percentage and calculate the interest on investment. It will not be given in the adjustment. Okay. Next, hall rent, there is no adjustment, we transferred as it is. Finally, we have to find out the surplus or deficit. How we will find the surplus or deficit? First, we will do the total of income side, then we will do the total of expenditure side and then difference. If your income is more and expenditure is less, we will be having the surplus, that is excess of income over expenditure. So, here we are having a surplus of 7175. So, in this way we have to calculate. In this way we will do all the adjustment and find the surplus or deficit. Okay. Now, let us see what is fund based accounting. Okay. Before going in detail with fund based accounting, let us see what is fund. What is fund? Fund means amount received or set aside by a not for profit organization for specific purpose. The fund amount which is received along with the income that cannot be used for the purpose other than those for which it is received or set aside. Okay. Donation received or funds set aside for specific purpose that are credited to a separate fund account and shown in the liability side of balance sheet. Okay. So, donation received or the specific fund, it is been, what we are doing it, accounting treatment is, it is credited to the separate fund account and it is shown in the liability side of the balance sheet. Okay. Now, the fund which is received for the specific purpose, and if any income is received therein from that particular fund, then it will be credited to the respective account. Okay. If it is match fund, it will be credited to match fund. If it is any building fund, it will be credited to building fund. Okay. Next is that, and if there arises any expenses or is payment is made out of this fund, that will be debited to the respective account. Fund is a liability, so it is shown in the balance sheet and it shows credit balance. Income received from that fund will be credited to that account. Expenses or payment out of this fund will be debited. Is this clear? Okay. So, fund is shown in the liability side, income will be credited and expenditure will be debited. And balance of fund after giving the expenses, okay, from that fund, if the expenses is paid out or any payment is made out of this fund and balance is left out, and that balance, if it is credit balance, it will be shown in the liability side, and if that balance shows debit balance, then it will be transferred to income and expenditure account. Okay. It will be much clear with this particular solution. Okay. So, let us summarize here. Fund is shown in the liability side of balance sheet and it is credited to the respective account. If income is received from that particular fund, that will be credited. If any payment is made from that particular fund, okay, that will be debited. After making the payment, if any balance is left out, if it shows credit balance, it will be shown in the liability side, and if it shows the debit balance, it will be shown in the income and expenditure account debit side. Okay. Now, let us see a question related to it. Let us solve the question here. Here it is a solution of page 1.61, question number 8. Okay. In this question, tournament fund is given and tournament expenses is given. Okay. The firm was having a fund of 80,000 and from this fund they had given the payment for expenses 14,000. Okay. Opening balance we were having 80,000, expenses 14,000. What is the balance here? 66. Since it is a positive balance, that means it is credit balance here. This will be shown in the liability side of the new balance sheet. Okay. The balance sheet at the end of the year. Okay. So, if there is any expenses after making the payment, if we are getting credit balance itself, we will show that in the closing balance sheet liability side. Okay. Same way here we are having the question, we are having expenses as well as we are having the income also. Tournament fund is given 50,000, tournament expenses is given 15,000, receipt from sale of tournament ticket is 20,000. This is a income, so it will be credited, that means it will be added to the fund and this expenses will be deducted, and thereafter if the balance shows positive, it will be shown in the liability side of the balance sheet. Okay. What is our opening balance? 50,000, sale of ticket 20,000 we received. Now, total fund we are having is 70,000. From this fund we had paid the expenses of 15,000 and balance we are having 55,000, and this will be shown in the liability side of closing balance. Now, let us see the next question. Okay. Here it is given prize fund 10,000, donation received 5,000 and expenses incurred towards prizes 20,000. Okay. The organization is having a fund opening balance of prize fund 10,000 and organization received donation for the prize, that is 5,000. Total fund the organization is having 15,000. Okay. But the expenses incurred towards the prize is 20,000. That means the organization had to spend 5,000 extra other than the fund and donation received. This extra 5,000 is an expenditure for the organization. So, it will be shown in the income and expenditure account debit side. Okay. So, if the balance shows debit balance, okay, if the balance after the expenses. If your balance is debit, that means it comes in negative, then it will be shown in income and expenditure debit side. And if you are having a positive balance, that means credit balance, that will be shown in the liabilities side of closing balance sheet. Okay, and same way the fund will be utilized for the specific purpose only. If it is given for price, it will be utilized for the price itself. If the fund is given for the match, then it will be utilized for the match itself. Okay, so this specific fund is shown in the liability side. If it shows debit balance, it will be shown in the income expenditure side. Okay, thank you.